Violate me and I'm old.
Ooh, girl, they kicked me off of TikTok because they said I violated personal information because I gave
That's
out.
probably not your first time violating. No, is it? I'm sorry. This is serious.
Good. No snorting on camera.
We're a very serious team.
All right. My name is Sherry Pettis. This is Jamie Bailey, Skylar Woody. We are the Sherry Pettis team. And yes, we did help that 23-year-old get a house. It wasn't a hoax. He's not my son. I don't look anything like him. Jamie.
He ain't mine neither.
One person was like, that's your son. I said, do I look like I'm from Guatemala? And he's not even from there. He was born here. So, look at that. We got one message in. Somebody got our phone number off of TikTok.
What's the daisy?
Okay. So, we are here to talk about how you can become a homeowner, whether you are 21 or 71 or 81, anywhere in between there. That young man, 23 years old, yes, he did buy a house with just a little bit over $2,000. He paid for his inspection, which was about $6,000. He paid for
Appraisal,
which
$650.
$650, and then his earnest money. He got his down payment, and down payment usually ranges from 3.5% on up to 20%. He got his down payment covered by Georgia Dream, and Jamie's going to tell you what Georgia Dream is.
Hey y'all, I'm Jamie from Southeast Mortgage, and we offer down payment assistance programs for our first-time home buyers. Now, you don't always have to be a first-time home buyer. I want to make that clear, all right? But typically, that's what we always ask because there's different programs for that. So depending on credit score and income, it's going to tell us how much you can be eligible to receive, because you can get up to $12,500 depending on what type of work you do, what industry. So great product. There's no payment. There's no interest being accrued. It's what we call a silent lien. So it's not a grant, but we'll walk you through all that. But it's legit, it's real, and it is a wonderful thing that Georgia has to offer to help folks get into homeownership.
Now, we got a lot of folks from all over the country, right? And I told the people you do loans in North Carolina, South Carolina, Tennessee, Georgia, Florida,
Mississippi,
Alabama, Mississippi, and then Texas.
That's all of our Southeast Mortgage states that are covered.
All except Louisiana.
Not Louisiana yet. There's always possibility.
And so people want to know, there are down payment assistance programs in all of those states?
Heck yeah. So there's lots of options, but in addition, even if there's not a down payment assistance program that you qualify, there's different 100% financing available. It's just depending on what your need is. And the best suggestion is just to reach out to Sherry's team, talk to Skylar, Sherry, get in contact with them first, and then we'll get connected and do a buyer's consultation so we can help you too become a homeowner.
Okay, so let's talk about some of the other programs out there that are 100%. So we have VA, and that is if you have served in the military. If you have, thank you for your service. We appreciate it. It's 100% financing, right?
Correct.
You have to have your
certificate of eligibility, all right, and you can be a reservist. So if you've been in for 6 years, most reservists are going to qualify for full eligibility of VA, which is no down payment. You can be active military, or you can be retired or served, just your 4 years or 6 years, whichever. As long as you have your honorable discharge or DD-214, we can look up your certificate of eligibility, because we, again, are a direct lender with VA. So if you don't know your certificate of eligibility, we can certainly pull that for you.
Okay. And tell us about a conventional loan. What is the difference between conventional and VA and FHA?
Great question. So conventional is going to be for your higher credit score clients. The minimum credit score is 620, but there's a significant difference on interest rate. When you have the lower scores or you're not putting 20% down, the private mortgage insurance can be pretty expensive when you have a lower credit score. Believe it or not, we're one of the lenders that offers 101% financing, Ms. Sherry, on conventional. So they can actually finance more than 100%. So that's kind of a cool program.
We're going to have to talk about that one later.
Yeah.
Okay. All right.
So again, those are great things, but that's why it's very valuable for you to really have a good consultation. We are not here just to take information, run your credit. That's not what we do here. We're really good listeners and want to advise what's in the best interest of what the buyer's need is today. That's what's important to us.
Yep. Let's talk about USDA.
Yes, I love that. If y'all can't tell, I'm born and raised Georgia girl.
Me too. No, I grew up in Boston.
But I am from the sticks. So way back in the day, that's how I personally bought my very first home, was in rural Georgia. It's 100% financing. Again, you don't have to put money down, but it is for rural areas, and it's based on population of that area and region. You can always go to USDA.gov, put in an address, and it's a cool map that will show you, is that area eligible for USDA. Here in Georgia, to give y'all some examples, that's going to be like Locust Grove, south of us here. Also Villa Rica or Rome, Georgia, Monticello, different areas of Georgia. So again,
out in the country, not on 285.
Yeah. If the cow is your neighbor, you're in rural Georgia.
But you know what though? I have cows and chickens right
okay,
up
now
the
here
street.
she want to be like everybody.
Right. McDonough, you can't get it in McDonough now.
No, girl.
But there's cows
Too
right up
many
the
peoples
street.
now.
There's a lot of folks out here. All right, so the home buying process. First thing you have to do is you got to decide you want to get a house. We've had a ton of great positive responses from that TikTok video. It's up to 4.7 million views. And most of the people are excited for him. They're like, congratulations, amen, good for you. But there's a few folks out there who are skeptical, is what I'll call them. Skeptical folks who don't really believe that this process was that easy. Now, it's not always easy, but that's why you hire a professional. You get a professional to navigate you through that process, right?
This one too.
This one, me, her.
A team.
Right, it's a team, right? We navigate you through that process. So you decide you want to buy a home, because home ownership is a pathway to generational wealth. Decide you want to buy a house. There are tax deductions when you purchase a home. You have an accountant, make sure you talk to an accountant. So let's talk about some of the things they absolutely have to qualify for a loan.
You have to be breathing. That's very important.
Get a pen, get a piece of paper, open up your phone, your laptop, take notes. Breathing is the first one on the list. Got to be breathing. Okay.
Employed or retired, so we have to have income, right? So that's the most important thing. Self-employed is a very common question that we get. So I'm going to talk to my self-employed peeps. It's great that you are an entrepreneur. However, government has specific guidelines on qualifying income. So you have your personal income, but then you have qualifying income. And qualifying income is what government regulates all of us lenders on how you can get qualified. So if you have not been self-employed for 2 years and have 2 years of federal tax returns for traditional finance, and I'm talking about FHA, USDA, commercial, all the government loans, okay, y'all? You have to have 2 years of federal tax filing based on the taxable income, and that's a little different, okay? And I'll coach you at that if somebody has more questions. But that's how we determine the amount you can qualify based on taxable income for self-employed.
So taxes for 2 years, bank statements.
Bank statement 30 days. If you work a job, we need your 2-year work history. We're going to need your 2 years of W-2s, 30 days of pay stubs, your driver's license, and I think that's everything. If you get child support or alimony, we're going to need that decree because that's going to break down how much you're receiving and get a history of that too.
And if you owe child support or alimony, you got to make sure you tell her that too, because it'll come up. A lot of folks think we won't find that out, but we do. You have to be honest, because if you're not honest during the mortgage process, it is called mortgage fraud. And I will not participate in that because I'm too cute to go to jail.
One of us is very high maintenance.
I'm not going to jail, right? So being a homeowner allows you to do some great things, some tax benefits, build generational wealth. So once you decide you want a house, you look for a house, you make an offer, you get your offer accepted, you work through the repair process. During that time, we realtors are working through that process. Jamie is going through all your paperwork. with her team. She has a phenomenal team that helps her help you navigate through this process. They will instruct you on what papers you need. You have to be diligent. Time is of the essence. You can't drag your feet when they ask you for things. You have to present it. So, question, Jamie. Someone asked me this yesterday.
Okay.
Let's say, I know you need 2 years of history. Let's say they change jobs within those 2 years, but it's still the same industry. Does it have to be the exact same employer?
I love this question because it's so misleading, and the answer is no. It does not. And sometimes you can even change your industry too. We just have to document it. What caused it? What if you were a student? I mean, what if you worked retail, right? But you've been in school and now you have, you're studying IT, you know, and now you've got your career path started in IT. As long as we've got the college transcripts that match what you went into school for, we can absolutely use that as well. Because I even want to speak to my young people buy-in that are 18, 19 years old. Again, you are dependent on your parents, and maybe your family has taught you about credit and things like that. You too can absolutely get into a home ownership. There are first-time home buyer programs. That's what it's for, to help you be successful into home ownership. So when in doubt, the best advice is to call and ask for help.
Call and ask for help. So we work through that process. You get your clear to close and you go to closing. I want to explain a couple of things that we were talking about in the video before we got disconnected. They cut us off. PITI.
Okay.
We break that down a little bit. So it is principal. Principal actually pays down the balance of the house, of your loan. Interest. Interest pays the bank, and that's how they all get paid. Then you have to pay your property taxes, right? And then you have to pay homeowners insurance. So, private mortgage insurance. But that is all included in one payment. So let's say, Jamie, their payment is $1,000.
Okay.
About how much of that is going to principal?
Oh, you'd have to use that amortization schedule just to be truthful on
I
that,
just give
you
a
know.
ballpark, maybe 200, roughly.
Well, I want to go a little deeper because I know Sherry's so, but again, y'all, this is what I do. So
Right,
I'm
I
just
don't know that
sharing.
part.
Okay, so the first 5 to 7 years of a mortgage amortization is going to be mostly interest. It's not uncommon. That's how it's always been. They collect the interest up front. Now, you can always make principal reductions. So if your payment's $1,000, I encourage you, if you can pay $25 extra a month or $50 extra a month, do it systematically, because it really will knock off. If you do that every month, years, you're going to knock years off of your 30-year amortization. You could knock it down to a simple 25 or 22 years. I mean, it just depends what you owe, how much principal reduction. You can absolutely do that, pay it off sooner than later.
So you can take some extra money. Let's say, your mortgage payment is $1,000. And once a year, you take $1,000 and just add that to your principal. That can reduce your mortgage payment significantly over the years. Don't know how much. Guessing just a few years, right? Depending on how much extra you pay. So it is a great opportunity not to be in a 30-year mortgage. Can you explain a 15-year mortgage?
Sure. Right now, so 15-year mortgage is going to be substantially higher payment, guys. It's because it's less months, right? We've gone from 360 to 180 months, okay? So obviously, shorter term is going to be a lot heavier payment on the budget. Not everybody can afford to do that.
The interest rate is better, though?
Sometimes in this current market, believe it or not, is the same.
Really? Well, what is the point then?
Well,
Okay.
exactly. So,
All right,
not
then.
to say it can't change, but in most cases, you know, sometimes we don't always get a break. I don't know the reasons for all that. I have no idea. That's all government run. Fannie, Freddie, they have those decisions. But in most cases for today, the 30-year fix is just where you need to go. Even some of my investors, things like that. The only time for my investors that I've seen maybe a little better savings for them is if I've done a 20 or a 25-year amortization. Sorry, banks claim.
What about programs for if you are a doctor, educator, first responder, police officer, firefighter?
So first responders, And again, for the state of Georgia, that's going to be the Georgia Dream
Okay.
Down Payment Assistance Program.
For teachers as well? Is there a program just for teachers?
It's called the PEN program.
Okay.
So standard with Georgia Dream, you get $10,000 that you can use for down payment or closing costs. But if you're part of the PEN program, so that's your police protectors, E for educators, and N for nurses, it increases to $12,500. Also, if you have a family member that is disabled, that's living with you, even if it's a little person, right, that has disability household income, it increases from $10,000 to $12,500.
Okay, and then I have another question. Tell me about the program my sorority sister was going to use to help get a house for her mom.
Yes, the parental loan.
I had never heard of that.
All right. So the parental loan enables those that are buying for their parents. So in this situation, what Sherry's referring to, her girlfriend lived up north. Her mama was wanting to be down here, but she's on fixed income, so there's no way, and y'all know with the cost of houses, that she was going to qualify just on her income. So I suggested the parental loan. And the advantage of that is she's buying for her mom to come and live down here. And instead of having to put 20% or greater down, we were able to put 5% down.
That's a big difference.
So
Okay,
it was
so
good to help mama.
how can the folks go to your website and apply for a mortgage loan and get some information from you?
You can absolutely go to our main website at southeastmortgage.com, and you'll see Jamie Bailey or /Jamiebailey.com, or you can reach me through the Sherry Pettis team as well.
Okay, and so we are going to put the link for Jamie mortgage application in this video. Skylar's gonna do that because I don't know. Skylar's gonna do that part. And you can call us if you have any questions, 404-642-1618. See ya, and so sorry that TikTok kicked us off alive. I learned,
And we love TikTok, man.
I can't go live for a whole day because I gave out my phone number. See y'all later.